So as you mentioned about indexes, from my friends or from my colleagues, I have somewhat heard about passive investing, index investing.
Yeah.
So is this related to what you are telling me?
Yeah, precisely. So now you have understood what is index.
Right.
Right? There are
Yes.
different types of index.
Mm-hmm.
Now, when we simply invest based on the index, that means I need not to apply my brain. I need not to do any kind of analysis. I simply put my money onto the index. How? Through mutual fund route.
Okay.
Mutual fund have the index fund, or what we call is passive fund.
Okay.
And passive fund is immensely popular in US, Europe, Japan, in all advanced countries.
Okay.
It is altogether a different debate. It will take a lot of time to explain why these are popular abroad.
Right.
In developed country, index is a more prudent way to invest, because there every bit of information is transmitted very quickly, and the value discovery or the value reflection on the stock happens instantaneously. So there is no time gap between the information flow and the value discovery on the stock. Whereas in India, the information doesn't flow that quickly to the market. So that's the reason why an active investment in India works better than the index investment or passive investment. But let me answer to your question that whether a passive investment or index investment is good or not. Like, definitely it is good. It is a very cost-effective way to invest, because the charges of the mutual fund in passive investment are, I think, very, very low compared to the management fees charged by the active investment.
Okay.
So that's why it's a very cost-effective way to invest into the index.
Okay.
And the biggest benefit of index investment is that you need not to apply your brain. You have to just take a sectoral call, or you have to take a call whether to invest, how much to invest, based on the simple valuation, parameters.
Right.
Which is much easier and very effective as an investment tool. They are very, very effective.
So I can just conclude that firstly, you'll explain about mutual funds in the later videos.
Yeah.
But right now we can conclude that passive or index trading is more of a no-brainer.
Yes. And
currently.
what mutual fund have done, they have created this index
Okay.
fund, and you can directly participate in the index fund.
Okay.
Or the another way to participate in the index fund is through ETF. ETF, that is exchange traded fund. Exchange traded fund. So all these passive fund are listed in the exchange.
Okay.
So what happens once this index fund are listed in the exchange, you can instantaneously buy and sell.
Okay.
Whereas in mutual fund, there is a time gap of 24 hours, one day. But in ETF, I can in a second buy ETF, just like stock. So exchange traded fund are nothing but index fund, which is created by mutual fund and listed in stock exchange. So that is ETF. And any investment through index is called passive investment.
Okay.
And it is generally, floated by mutual fund house, available to common investors.